Welcome back to Lamb's Cryptoverse. So today we're going to talk about something people really don't talk about when they talk about blockchain and crypto, and that's systemic risk. Because blockchain is a very, what should we call, long duration asset. So it's almost like trading gold. So we're going to just focus on macro risk, systemic risk for blockchain. This should be pretty quick and pretty easy because it's just macro stuff, not about the specific attributes of the chain. So let's get started. Number one, crypto projects, as I've said many times, must be analyzed like a three-legged stool, like in a holistic manner. You can't just use tech analysis. Most people just use technical analysis like charts, trend lines, Fibonacci. You have it on blockchain. Look, that's important, but you also need to look at the fundamentals of the project and even the macro. And macro is becoming increasingly important. So again, this is a holistic approach. We're going to be focusing on systemic risks. So this risk governs, and you can read the bullet points here, it governs all movements of all asset prices, even those that do not trade on stock exchanges. It affects, its effect, I should say, over the last 2 decades has been stronger than ever. I said stronger than the last previous 2 decades. It's probably the strongest it's been in history. And this is because of, well, I guess it's the next point, but I have to say something else. So let's just go to the last point. Given the global debasement of fiat currencies and high fiscal deficits and debt, I expect systemic risk to become more pronounced. So what I wanted to say before that third point is this. There's been what's called fiscal dominance, and that's because, or you could blame it on COVID, but it's more than that. The Democrats have traditionally been to blame for this. The Democrats have been known for spending a lot of money on the economy, mostly consumers, and the Republicans tend to spend more or subsidize corporations. But now it's like they both spend a lot, and they don't seem to be worried about the deficit. Not just the Democrats, but the Republicans too. No one seems to be worried about the deficit, but our deficit is huge, and the debt in this country is $35 trillion. The debt to GDP is one of the highest in history. We are, as the United States, as a country, the United States is operating in this country like it's a wartime economy. So there's what's called fiscal dominance, but there has been, I should say, until recently, monetary dominance, where the monetary, how should I say this? There's a monetary control. So we went from monetary dominance to fiscal dominance because the Fed was raising rates. But I think what's going to happen is we're going to lower the fiscal dominance somewhat in 2025, but then go back to monetary dominance, where we lower interest rates and we go back to QE, quantitative easing. So it's a little complicated because we have all this spending, both physically and monetarily, but it's basically we're like drunk. The government's operating like drunken sailors, and this is why someone told me once This young lady told me, I said, why do you believe in Bitcoin? She said something I never heard of. She said, well, it's because the government, our US government, broke our trust, the trust between us and them. They are not managing our money, our private citizens' money in a responsible way. And that's why Bitcoin was created by Satoshi Nakamoto. So what the heck is systemic risk? Risk is defined in financial terms as a chance of an outcome being different than what it's expected. I consider risk as volatility, but mostly downside volatility. Another thing I wrote here is risk includes a possibility of losing some or all of an original investment. Second point, quantifiably, it's usually assessed by considering historical behaviors and outcomes. And this is what I mentioned now. In finance, standard deviation is a common metric associated with risk. standard deviation, or variance. What else do I want to talk about? Yeah, two types of risk. There's systemic and idiosyncratic. That's unique risk. Today, we're not talking about unique risk, which is extremely important because there's lots of risk in individual projects, and the projects, I should say, the behavior of crypto is inefficient, so it's not being examined and analyzed correctly. So slide 5, why I only focus on risk and not return. So everyone asks me, and I see videos and blog posts about this, they talk about, oh my God, this coin's down 90% and it was at $50 and now it's only 5, so it could go from 5 back up to 50. Do not do that. That's a very risky behavior. Remember, there was a huge amount of risk in blockchain and in crypto. By the way, I'm using digital assets, blockchain and crypto interchangeably. They're all the same thing. But what's very important for you to know is this is like venture capital. Not even like small caps. It's riskier than tech stocks, riskier than large cap stocks or mid cap stocks and small cap stocks. This is like venture capital. So it's very risky stuff. You're playing with fire. That's my second point. So if you're playing with fire, I think you should only consider downside risk. Don't worry about what the price is going to be tomorrow or next year. So price discovery is very important in this area because there's inefficiency. So questions. My question to you is, how large is the blockchain project you're looking at? How many developers are they? How much money do they have? What's the market cap of it? Because if it doesn't have a large market cap or developers or money, it's going to be very volatile. So if it's volatile, that's high systemic risk. That's a high standard deviation with your benchmark. And in this case, you can use Bitcoin as your benchmark. So these are examples of what is not a systemic risk. Hacking is usually an internal idiosyncratic risk because an individual project could be hacked, and that's happened many times. Software bugs, right? If you have a problem with the way your software was designed, that's a bug. Or if there's an attack on your project, your blockchain, that's a bug. So if there's an outage, that's also internal factor. And Solana had a lot of that a few years ago. Lawsuits, obviously that's internal. Ripple. The Ripple lawsuit is internal. Key main risk, if you have a very famous person working for that blockchain project. Gavin Wood, Polkadot. What's his name? Charles Hoskinson over at Cardano, Input Output. What's his name? Tolley over at Solana Labs. That's key man risk. Forking in a community split. That's, again, idiosyncratic. That's your particular project. Partnership risk. Maybe you have venture capital risk or partnerships, or not, I shouldn't say partnership, but risk with the hedge funds or brokers that are involved. FTX Alameda Research is a good example. Or maybe there's a partnership risk with Terra Luna. Remember that just broke up? That's partnership. That altogether, that's partnership risk when you're looking at VC firms, hedge funds, or other large blockchains that are involved with you. So examples of systemic risk, and that's what this presentation is about. Geopolitical, war, trade disputes, regulation, SEC, right? SEC's been suing like crazy. Liquidity and the level of interest rates. And we talked about that earlier when the Fed was raising rates aggressively 2022. That was a systemic risk. Counterparty failures. Here I'm talking about maybe there's a failure with a bank, Silicon Valley Bank. Black swan events, that's a systemic risk. Economic downturns. Remember, blockchains and digital assets are risk assets. So if there's an economic downturn, the stocks go down, blockchain projects, prices, like crypto prices, will go down. Infrastructure failures. If the power grid and electricity goes out, That's a systemic risk. Internet outages, that's another example of a systemic risk. Sources of information. It's much easier to find sources of information for systemic risk. So this you can find anywhere, reading a newspaper, watching TV, sell-side firm, market economist, financial news sites, Bloomberg, CNBC, the Wall Street Journal, and even YouTubers. Yes, YouTubers do a great job at identifying systemic risk. And you know it's a great podcast? Bankless. Check out Bankless. Final thoughts. I use risk as an overarching factor when I'm evaluating blockchain projects in my rating scorecard. Second point, determine if the risk is short-term or a long-term one. Like, for example, a few weeks ago, there was a risk-off event in worldwide equities because of the Japanese yen and the carry trade. Do you remember that one? People, investors, hedge funds were selling the Japanese yen. Basically, they were taking loans out on cheap Japanese yen and using them to buy risk assets. And when that trade reversed, it caused a short-term, almost black swan event in equity markets and even in blockchain. Third, my final thought is include both systemic and unique risk factors. We talked about this already. You got to take a holistic approach. Look at the blockchain, look at the project, look at the leadership, make sure it's not a fraud, make sure they have integrity. Look at all the unique risk factors I mentioned a million times, and then consider systemic risk. I think that's everything. I think that's my last slide. Yeah. So thank you all for listening. And don't forget to smash that like button and subscribe to us. Thank you. And